You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again to commence our broadcast week here, to kick things off on the old Options Insider Radio Network. A fun week in store for us. We got the whole schedule there. If you didn't get it via email, and you should, just go sign up over there at theoptionsinsider.com so you'll get notified about what we have coming up. It's also posted over there for you on the old Twitters at Options. You can see all the great shows we have in store for you this week. Quite the lineup. Great pro Q&A coming up tomorrow. All the other fun stuff we have lined up for you throughout the week. Of course, if you like to get access to the live and enjoy the chat and chatting with folks and asking questions of all the hosts and everything else, theoptionsinsider.com/plus is the place to go. If you want to go above and beyond, get access to the pro Q&As for tomorrow, as well as Options Oddities on Friday, and everything live throughout the week. Theoptionsinsider.com/pro is the place to go. And of course, however you listen live after the fact, keep hitting us up, those questions, those comments, those insights. We'd love to hear from all of you guys and gals out there. And before we dive into the old OB for this week, you know what we have to do, listeners. It is time for our much heralded, much beloved game here to kick off our broadcast week. Can you name that 80s wrestler by their entrance music? This time, we're going to go a little bit different. Not just one person. It's two. It's a tag team. I'll give you that hint. If I go any further, I'll probably spoil it for all of you. So here we go. Can you name that 80s tag team? That's a fun one, bit of an obscure one, but once you know the characters involved, maybe not so obscure. Let's go around the horn. Let's start, because he probably hasn't have a chance in hell of getting it. We are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of the family fortress-like compound there deep on the shores of Maine, where he can do naught but fight against the clam piracy and watch the VIX. So he's got two things to do, and that's it. Mr. Rock Lobster, hey, welcome back to the program. And B, can you even name any 80s tag teams, sir?
Thank you for having me back. And the only thing that comes to mind is something from the Knight Rider, but I know that is clearly not the case. So I don't even know. I don't even think I've seen a tag team happen in wrestling, to be honest. I don't think I've witnessed it.
So you can't even can you name any tag teams off the top of your head? Just name one.
None.
None. So Mr. Rock Lobster gets a goose egg. Instead, we go out to the man who inspired this segment, dare I say, requested it. Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. A and B, can you name that 80s tag team, sir?
A, always happy to be here. B, when you said tag team and I would like it, I was hoping for someone else, so it wasn't what I was hoping for. But I will say that I'm going to give it a guess with this one. I'm going to guess Shawn Michaels and Marty Jannetty, the Rockers.
Damn, well done. Yes, I was about to go into all of these obscure clues about, one of them would pretty much fall into obscurity. I think he was accused of murder recently on the internet. And the other one became pretty much one of the greatest, if not, depending on your viewpoint, the greatest in-ring wrestler of all time. They, of course, infamously blew up in that barbershop thing, which is still legendary in the annals of. So there's a lot of different clues I was going to give you, but you didn't need it there, Uncle Mike. Well done, sir. And you know what? I think we have a special guest for you today. A little birdie tapping me on my shoulder here, Mr. Uncle Mike. So I do believe we have someone else who wants to speak to you. 1 second. Let me see if I could patch them in for you, sir. Hold on.
Happy birthday to you. Happy birthday to you. Happy birthday, Mr. President. Happy birthday to you.
Wow, Marilyn herself beaming in from beyond the grave, sir. Uncle Mike, happy birthday to you, sir.
Well, thank you. Much obliged on that. And then when you did say that I think you're going to like this, it's a tag team, I thought you were going to go with my precious Road Warriors for the day. But nonetheless, thank you for the birthday wishes. Always obliged. And what better way to spend your birthday than being on the option block?
If I had thought maybe I would have done the Road Warriors, you're right. That would have been a fun one, too. But for some reason, the Rockers just came to me. I wanted to rock out this week as we keep on rocking right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading, what the heck is lighting it up out there in the markets. Yes, the show is about more than 80s wrestlers, even though that would be fun. Maybe we'll have a separate segment just debating the greatest 80s wrestlers of all time, because that show could go on forever. But instead, let's go on out and see what's going on. And you know what? Not a lot of green on the old screen today. After the end of last week, where it seemed like maybe the markets were starting to come to grips with all of this back and forth in DC, it is back on the radar again. The old DC spookage, to coin a phrase, is spooking the markets out of bed yet again. Coming into showtime, we have the S&P, kind of the Goldilocks of the bunch, off about 1.5%. We have the Dow off a little over about 1.1%. And the NASDAQ, once again, leading the charge into the abyss of red, off nearly 2.5%, about 2.4% right now. So the sell-off is back, and vol is creeping back up. If you really want a good take on everything that's been going on in the world of vol, and maybe why vol isn't performing the way you think, check out our volatility views from last Friday. A lot of you were tweeting about it over the weekend and stuff. It resonated with a lot of you, the notion that, the skew is exceedingly high and the hedges just aren't working, and vol isn't performing perhaps the way you might think. That show was a great breakdown as to why, because you can see it playing out yet again here. Coming into the show right now, we had VIX was literally unched almost just right before showtime, was at about 23 3/4, which was exactly where it was on Thursday's show. As of coming into the start of the show, it was up about 0.5 point to about 24 1/4. VVIX at about 118.5. That puts it down ever so slightly, about 1.5 points from where it was last show, but give it a few minutes. Maybe it'll get back to that 120 level. VXX was kind of actually still unched to down coming into close to the start of the show. And then as the show kicked off, it has ticked up again up to about 28 1/4. As it kicked off the show, it puts it up a little over 0.5 point from this time last week. UVXY at a 25. It's exactly unched from where it was on Thursday's show. Man, it would have been nice if it went out on Friday at that level, but I digress. And Vol Q, 25, up about a third of a point from this time last week. So a lot of table setting, but he did get it right without any hints. And it is also his birthday. So let us commence with Uncle Mike, sir. What is lighting up your day on this? You know, the market's selling off, but it's your birthday. So it's still an Uncle Mike type of day, right?
There you go. There you go. Yeah, and not a lot of people know this, but today actually is National CB Day. So when you hear the truckers say that's a big 10-4, good buddy, October 4th, 10-4 is National CB Day for those of you who might be interested. And that's not just some dumb thing that was made up on the internet. That's something that I've known my whole life for obvious reasons.
Speaking of national days, I saw someone arguing that today is National Taco Day. And I had to say to that person, that's idiotic because it's not Tuesday. Everyone knows National Taco Day can only be on Tuesday for Taco Tuesday. Am I correct?
Well, I mean, Taco Day's every day to me, quite honestly, unless I'm going to Portillo's for an Italian beef. You could make a case for National Taco Day all 7 days of the week, but I'd have to agree with you. If you're going to make a special day on it, you got to make it Tuesday. I would agree with you on that.
And speaking of which, Portillo's going public soon, sir. We'll have to rope them into the odd block one of these days.
Yeah, I'm definitely looking forward to talking about that as well and debating the menu options on it at some point also. But anyway, in terms of today, it was so on Friday I had to manage my risk and get out of some of my short put spreads, and I did. And so naturally, as soon as that happens, market goes back up. I'm like, all right, well, I kept some deltas. I actually kept a little bit of gamma on the table in case for some reason we were going to have a 200-point rally today. I didn't keep a lot on, thank goodness. But I want to emphasize again the importance of risk management always, 10,000% of the time, needs to be more of a priority than market sentiment. And so I think you need to really hone in on that as a trader, as an investor, whatever the case may be. Your market sentiment is one thing, but you can be wrong with that. With risk management, if you're never wrong, I mean, you can manage risk improperly. I'm not trying to say that, but that's something with which you can be certain of. You can be certain to where I'm going to manage risk by taking a small position. I'm going to manage risk by getting out at a certain point. Of course, you have the risk of gap down. You have to understand how to manage that risk as well. You can manage risk by hedging in certain ways, whatever the case may be. But the first point that I want to make on this is that risk management is what keeps you doing this for multiple decades. Market sentiment, that'll make you some money now and then, but risk management is what keeps you doing this for multiple decades. And I think everyone that's ever been on this show who's been in this for multiple decades would agree with that. Now, in terms of the markets at hand right now, I want to add to the point about, number one, I'd highly recommend everybody listen to that show that you're talking about how you're breaking down volatility and the skews and things like that. Even if you're not a volatility trader, you need to have an understanding of it, because even if you don't trade volatility, you still trade volatility in some way, shape, or form. I'm not a volatility trader, but I still trade volatility, even though it's not what I do, if that makes any sense, because Vega is a factor in option pricing that it's there. It's not going away, and you need to have an understanding of it. In terms of today, I think this is a DC Comics type of day. I mentioned this on the show last week, in that the beauty of this show is Mark won't let us talk about our political ideologies, but he will let us bash all politicians, which I'm more than happy to do on any occasion with which I can. And I think this is just another one of those areas to where we're going to continue to see this until we magically strike a deal, either at the 11th hour or we don't strike a deal. Democrats blame Republicans. Republicans blame the Democrats. CNN says how evil the Republicans are. Fox News says how evil the Democrats are. And perhaps a day or two later, once we realize that somehow miraculously life goes on, that then they'll make a deal then. So it's either going to be 11th hour, I think, or it's going to be a day or two after the fact under those circumstances. In terms of what's moving today, what's interesting to me is that we're not seeing a huge rush to safety right now. And I have a hard time believing that everybody's putting their money into real estate transactions, because we're not seeing too big of moves in the commodity space, I mean, I know we have oil up on the day, and I know energy stocks are up on the day, but it's not a ginormous move to where that's where all of the selling money is actually going to. So I think it's one of those days to where we do have a little bit of selling in the 10-year. We have a lot of selling in the S&P. So this could be another one of those days to where perhaps the bonds understand this a little bit more, because we actually had a little bit of a sell-off in the 10-year earlier today, and it's actually recovered, but it's still not positive on the day. So it's kind of a wonky day in that normally when stocks are down this much, you're going to have some buying going on in the bond world, and we're still negative on the day in the 10-year. We also are having not a ton of movement. We're having a little bit of upside movement in gold and silver. Of course, oil being up $2 on the day, that's where the upside move is coming. But we're not getting a lot of rush to safety at this point, or rush to commodities, or a rush somewhere else. So I mean, I hate to say I love this market. I mean, I don't know if I've ever seen a dip I don't want to buy in my 20 years of doing this, but I would like to say that there are reasons to believe that there could be, at least at worst case, some type of a dead cat bounce coming. What I like now, and what I'm going to be looking at a little bit later today towards the close, I typically do my enter positions later in the day towards the close, but what I'm going to be looking for are other put spreads with which I may sell. I want to see where volatility is later in the day. I want to see where the market is later in the day, but I'll be looking at that. I probably won't be closing any of my short calls that are on top of my long calls, or on top of any covered calls that I have going on today. But this could be a day with which, if you are looking to get in on a dip, like I said, I wait till the end of the day to make this decision, but this might be a decent day to consider it. Also, what Andrew likes to do, find a stock you like, find a put that you want to sell, and sell the put, because you might be getting a better deal on vol on a day like today. Final thing that I want to say in terms of hedging, as I've said this on the show multiple times in the past, is that I'm not addressing what Andrew and Mark do over at Carmen Line. I'm not discussing that, but what I'm talking about is that for years I see people buying their stocks, and instead of buying puts on the S&P to hedge themselves, or buying puts on the stocks themselves to hedge themselves, they'll buy calls on the VIX or some type of volatility to act as a cheaper way with which to hedge. And I've often said that's like buying car insurance to protect your home. And I still stand by that and believe that to this day. Now, are there times with which they can react in counter moves to one another? Yes, of course there is. And Andrew and Mark can talk to you guys about that till forever, quite honestly. That's what their area of expertise is. That's what they do. But what I'm saying is that if you're looking to hedge your nest egg, your big money, so to speak, if you want an actual true hedge, I really want to just emphasize now and always that I think it's important to hedge what you're actually hedging and not use something else for it. And that is what I am seeing today.
Thank you for that, Mr. Birthday Boy, as we go on out now to the dark and stormy shores of Maine. Mr. G, first off, I have reserved about 10 minutes here at the top of the show for you to just go on at length about your memories of Marty Jannetty and Shawn Michaels, a.k.a. the Rockers, how they changed your life. And then B, if there's any time at the end of that, you can also talk about the markets in VIX. Have at it.
Well, heck, I didn't get that because I actually could have talked for quite a while on the Rockers if you want me to, but I'll leave that for Andrew.
You know what? Their influence was so profound, Mark. I really don't even know where to start. So maybe I should just get to the markets. What do you think?
You're that one member of the Marty Jannetty fan club. One, and it's you.
Well, you know what? He had vowels at the end of his name. So automatically,
there you go. He's +1 in your eyes.
Not a vowel. You're Italian. The Italians got to stick together. You know, we lost Columbus Day, so we got nothing. What do we got?
We got nothing now.
You know, we got the
nothing at all.
So as far as markets go, I like TOSAW's profound. You got to hedge what you hedge, I think. Was that the line? I wanted to just use it verbatim. I thought that was pretty good. You need to hedge what you hedge.
That's what it was.
Yeah. So what I call that is like apples to apples comparison. So VIX is good for lots of stuff, right? But it has limits in its capability as far as like the handle, right? So, and what I mean by the handle is like how many points can it move? And what Mike was talking about was, yeah, SPY can go down, okay, 20, 30, 40, can go down quite a bit, right? 8, 9, 10%. VIX can rally, and we have seen the rally to 100, and, there was the 50 Cent made a gajillion dollars on his calls when he sold them out for $45, which I bet is probably the single best VIX trade in history, by the way. I guess Russell could probably pull some data up on that, but at least from what I've been watching, I haven't seen many 50 Cent calls go to $46 on, I don't know, what do you do, 500,000 or something? So
yeah, he's off on his private island. That's why we haven't seen him again. He hit that home run. He's good.
Well, also, I think he had to recover from his whatever credit position he had, right? So
yeah, he didn't do it naked.
What happened to the credit markets, right? They probably blew up and came in, right? But if he didn't sell his VIX calls, now obviously that was one of the first times in a trade where you didn't, with a cash settled index, he didn't have to sell them because they just handed him a big check at the end, which is the magic of cash settled, right? You don't have to close it if it's way in the money. You just like, okay, all of a sudden the account's up and you get the cash. So either way, but if you're going to hedge SPY, or you want something to hedge SPY, or a basket of, let's say you're using, let's say you have a lot of what I would call like aggressive tech stocks, right? Maybe something like ARKK, that ETF, or actually, it's kind of that ETF holder. That's a pretty good basket of aggressive technology stocks. So if you have a lot of them, maybe SPY wouldn't be the best hedge, but maybe a put or a put spread in RK would be a pretty decent hedge. I was actually looking at some cheap puts for this weekend there. Just as a straight trade, I thought like, okay, the 100 puts are around 50 cents. And you could probably make some kind of cheap fly or cheap call spread with it. But again, not a very expensive hedge on a basket of what we'll just call aggressive technology stocks. So as far as hedging goes, yeah, I agree with Tucson. Like VIX is great as a trade with something, but it has a limited amount of range. What generally I find with VIX that is good is it's a good disaster hedge for the money. Like you can have like $1 spreads can go to $5 and stuff like that. In SPY, the put spreads, it's a lot harder for you to create that kind of a trade, because the SPY puts, especially with VIX at this level, are just more expensive. At this point, you'd be paying top dollar for them. And in VIX, you pay that elevated level, but the call spreads remain relatively low. So, your entry cost is less. So it's kind of how you want to set your trade up or set the hedge up. I haven't had a 12 VIX hedge in a while, and those are totally different trades because the vol's so low. You can do so many, when VIX is 12, you can do a lot of things leaning on the decay in the products. But right now, everything is like full pop. You're paying, it's like walking into Neiman Marcus, basically. You want that shirt, it's going to be $400 or $500 or whatever it costs. Like you're paying full pop for everything in the vol space, and it's been like that. So, is it congressional wrangling? I mean, what they're fighting over what looks like some pretty crazy tax and spend bills. So, what does that do to the average person or the average company? So I think they're, normally the Fed kind of did their best to say, hey, we're going to do this taper thing. It's going to be in June, and they produced what I would call a path till June, right? And that was relative certainty over interest rates. Things can change, but they had a path. And within a week, I think VIX was probably 1660 or 1670, which was the low probably of the last month. And I could give you that date, right? So you could also, you see how the market takes things by what the bid for vol is. So I think our recent lows here, right after that session, I think about 16. So that was actually 30 days ago, 1717. So I'm going to say, wow, so we haven't seen a close below 16 in VIX in the last 30 days. I know that might be hard to believe, but it's true. It's true. So that's that anyway, from that big pop in vol we had like in mid-September down to, then the Fed kind of said their thing. And then we had a lull for a couple of days. And now all of a sudden, again, same thing. They decide to push the fiscal, the debt ceiling. Wow, Congress just got it done. Imagine, because they do have the majority of votes, so that's pretty easy to do for the Democrats for that type of thing. So they did it, and now there just seems more confusion, right? And there might be some rate confusion, and there might be some oil. All of a sudden now we're not pumping enough oil, which. Okay, like blink from last year at this time. Do you guys remember how low oil prices were? And I would venture to guess most oil stocks were 50% lower than they are right now, or very close to it last year at around this time, right before the election. So you're seeing like lots of, again, uncertainty over outlook is making vol higher. This is now we're going past COVID to some degree, because Merck announced this week that they have a high probability of producing just a pill that will help people reduce the symptoms. People just don't want to be in the hospital. Like, we have stuff now to help fix people. So, when you think about it, is it really a big deal market-wise? Like, there are current solutions. There's the vaccines that keep people out of the hospital. So COVID as an event, a vol event, is starting, I think, to wane. However, VIX is still not, is not making new lows. So something else is making it happen. So when you look at vol, like I do, and that's why I like to trade. And I like to trade it because it moves, right? Today it's 24. Tomorrow it can be 18. You just never know. So it has that reverting potential that makes it kind of, makes it fun for an old trader guy like me with ADD. So, you can watch Apple sit 142 for, 3 straight weeks. VIX generally, even if that's happening, there's usually something to do from a vol decay point of view. So anyway, this is where we are. I don't think it's the COVID thing anymore. There's too many good therapies out there, which is good. And they're getting out to the world. But you're looking at Pfizer is like at a 60-day low, at least, I think, right now. All the other stocks that have helped develop therapies, definitely not at the highs. The only one now is Merck, because it's the shiny new object on the block. Don't be surprised if you see some of these other companies come up with a pill therapy as well. So, but now this is actually, Congress, what's going on with our government. So I think the layers are being peeled back a little bit. So, and I think that's what we got. It's a little messy. It's adding some uncertainty to what's going on, and the market's reflecting that. So I think COVID is starting to, I would say it's not the top line problem anymore. It's sort of the odd dysfunction in Washington, even more so than normal. I think that's getting people a little concerned.
Yeah, it's definitely DC in the focus this week. Let's see how much of this focus is being reflected out there in the old market activity right now. And it looks like it's pretty much focusing everywhere except VIX. VIX not really putting up a ton of paper. I mean, decent paper, don't get me wrong. Not that long ago, it was in the 300K range, 380 or so for ADV. So a day like today, 281 would have been a lot of paper then. It's up to about 465 now, and it's about 281 on the tape, like I said, right now. So a decent day, a robust day for VIX, but not exactly popping off the way some of these other indexes are out here. SPY already at nearly 4.5 million, about 4.4 million. That would have been exceeded its ADV already about a month or so ago. That ADV has obviously increased lately. It's up to about 5.4 million. Still got a million to go, but given the pace it's on, it could hit that in the next hour or two. So SPY putting up some numbers today. The S, same story, already north of a million, 1.2 million contracts right now in the S. You know anything about the S, it's a pretty beefy contract to move those kind of numbers. The ADV has also ticked up quite a bit as well. It was around 1.25 million for a long time. In fact, it threatened to break 1 million not that long ago. Now it's up to 1.68 million out there. So the S has been putting up some impressive numbers of late as well. The Qs, the Qs are doing numbers today because the NASDAQ is leading the charge to the downside yet again. It's pretty much at its ADV already. The ADV is 1.6 million. It's at 1.6 million right now. And the other laggard out there are small caps. They're not really playing in this sell-off out there, at least from a volume perspective. 268,000 contracts on the tape for IWM right now. The ADV, 664. So IWM not exactly feeling the love out there from a volume perspective, at least. Let's see what's feeling the love from a single name perspective. This is where usually most of the intriguing action has been of late out there in the market. It cost you 226,000 contracts to break into the top 10 right now. That gets you to the Amazonians. Number 10 over there. I haven't seen them at the bottom of our top 10 in a while. Usually they're lurking somewhere in the middle. That means it's an interesting day. Maybe some new names breaking in there, like number 9. The aforementioned Merck, good for 230,000 contracts. Of course, the news of their orally taken antiviral medication actually working, seeming like it works for treat COVID symptoms, something we've been missing out there. There have been some injectable antiviral remedies. This is the first oral one, so obviously a lot easier to take in a variety of scenarios. So that's getting people excited and also sending Merck higher today, up about 1.6%, trading right around 82.75 right now, and also good for 230,000 contracts. Haven't seen Merck in our top 10 in a while, but it's there today. Number 8, BABA, right around 250,000 contracts, 252 to be precise. Number 7, Palantir. Day that ends in Y, at least since their last earnings, Palantir is going to be in the top 10. Good for number 7 today, 258,000 contracts. Number 6, NVIDIA. Again, this chip crisis, on again, off again. Will they, won't they? What the hell's going on with chips? NVIDIA is going to be in there somewhere. Good for number 6 today, 270,000 contracts on the tape. Number 5, AMC. I saw the apes were out in force about something with AMC this morning. I didn't get a chance to see what it was, but it's good for 303,000 contracts. Let's look really quickly to see where AMC is hanging out today. Oh, it's off $1.33, $37. I'm guessing the apes not too happy out there today. 303,000 contracts, though. That is no mean feat. Number 4, it's Ford. This is the one we've debated for a long time. Is Ford a meme stock? Some days it seems like it is. Maybe you can put today in that category out there. They've been having some negative headlines of late for the most part, but the stock seems to be shaking those off. Up and down another almost 2% today, almost 14.5%. So maybe all those folks who were piling into Ford upside calls, maybe not all the 19, 18.5, and 20 folks. Those folks all lost a ton of money, but maybe the more, shall we say, realistic of those, let's say the 15 strike, those have a chance of actually looking pretty good. Ford bucking the trend out there today. Sales are down. They keep saying how they're going to having problems with India. The chip problems are plaguing them, and yet the stock seems to be shrugging it off. So the Ford bulls out there liking it to the tune of 353,000 contracts. Number 3, Facebook. You knew this one was going to be in the top 10 today. I've seen a lot of headlines of Facebook's no good, horrible, very bad day, something along those lines. So they've had quite the just 1, 2, 3 punch out there of late. Of course, the big whistleblower on 60 Minutes over the weekend talking about how they have all this internal data saying all their platforms are harmful, especially Instagram for children and everything else. So a lot of negative stuff coming out there about Facebook. Of course, seems like there's a negative antitrust ruling or decision or something lurking in the offing out there for them every other day as well. So of course, now there's a huge outage on Facebook today. I'll have to look and see is that maybe inspired by these reports? Are the hackers going at them? Who knows? But we'll have to look here. Either way, a rough day for Facebook, off 5.6%, nearly 20 handles, about 19.25 right now, trading right around a little bit shy of 324 out there. So big drubbing for Facebook. Good for number 3, though, on the options list, 397,000 contracts. Number 2, yes, I said number 2, it's Apple. 847,000, a rare kind of quiet day for Apple. Not a heck of a lot of paper. Usually this time of day, they're threatening, if not over 1 million contracts. Who's over 1 million? It's Tesla. 991,000 contracts to boot. As we keep on rolling, we got to get going. We got so much stuff to pack in here on the show. I don't even have time. OCC just came in right now. We'll get to those on Thursday, listener. Spoiler, September, a good month for overall options volume. We'll get to earnings a little bit later this week as well, because we got to keep on rolling. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, everybody, welcome to the Odd Block. We don't even have time, listeners, to fully unleash the Eye of Sauron today because we're already up against it. So instead, we're going to look back at what the Eye of Sauron has already found for us. You know, our back catalog of trades to analyze and watch and break down is enormous. We need to keep chipping away at it before it just overflows. We can't just keep adding new trades to it every week, even though it seems like we do. We take one out, we add three more. But this week, we're going to pop some off. Let's go back now, dial the Wayback Machine to August 19th, listeners. On that show, we talked about, looks like a post-earnings call sale in Bath and Body Works, ticker symbol BBWI. At the time, we profiled 5,624 of the SEP 65s going up for $3.50. These were pretty meaty calls. I mean, the stock was, or I should say the options were 340 at 395. That's, if you want, that's about a 45 volatility over here. The stock was pretty much right there. These were at the money calls. The stock was 65.31 when this trade went up. A total of 12,000 went up on the day. And let's see how the stock fared over that period. It closed at 66 and about a half, almost exactly. So from an overriding perspective, kind of worked out, unless they don't want to dump their stock, in which case, perhaps not. But let's look here. How high did the stock get getting into earnings? These went up on the 19th of August. And then we had quite the pop in the stock right after that. The stock got up to 69.03 on actually the high of the day was 69 almost and a half, 69.47 on August 30th. So these, not that long after this guy sold them, were pretty much in his face. And then he got the move he needed. It came back down pretty aggressively, back down to about 63.40 or so on the 14th. Expiration was a few sessions later on the 17th. He had a little pop going into that, which didn't exactly help him. I'm sure he wished it would have hung out back in the 63 handle. But c'est la vie, still not as bad as it was. These calls were still open at expiration, so it seems like our friend here is going to unload some of his stock at the magical price of 68.5, which $2 higher than where the stock went out. I guess you can't really argue with that. Mr. Rocklop, seems like we're going to have a theme today of people putting on trades and then not closing them out. What are your thoughts here on a pretty beefy overwrite in Bath and Body Works and pretty much keeping most of it, but not really rolling or taking it off, sir?
I guess, do you feel like that's kind of the recipe for the day? Would you want to take the whole thing off today? That would be my question for you. If you're in their shoes, what would you want to be doing on a day like today?
Well, you know, when you had that thing when it moved aggressively in your face and you were way through your strike and then it came back down, yeah, maybe I would have peered some of it because you had the opportunity then, right? You had a nice opportunity to do so, and then you missed it. So yeah, I mean, I guess you don't mind dumping your stock then. If you're writing at the money calls, you got to be okay with either rolling or selling your stock, one of the two, right?
Correct. I agree. You got to do something.
And this guy did nothing, so he's selling his stock. So we shall see. So there you go. Yeah, don't complain. Don't come to me. Listen, I get your email about this. Don't come to me. You sold an at the money or in the money call and then get upset that your stock gets called away. You got to roll. That's the deal. If you're going that close to the fire, you got to be prepared to get a little burned. All right, let's go on out now. I think, like I said, doing nothing with your premium, short and long, is going to be our theme on the Odd Block today. Because next we're going back to August 19th. So that same show, actually, listeners, to everyone's favorite name, Grupo Financiero Galicia. This is obviously an ADS here. This is ticker symbol GGAL. This is out of Buenos Aires. It's the fifth largest banking operation in Argentina. So there you go. Ticker symbol GGAL. At the time, it was trading, let's see, right around 8.25. And we profiled almost 5,000, 4,924 of the SEP 10 calls going up, lifting the offer for 15 cents. So these were pretty out of the money. This is almost a 70 vol, about a 69 vol. Let's see. There were earnings in this, because the earnings were August 25th, so a week later were the earnings. So this was kind of an earnings swing for the fences to the upside. Not a ton of outlay, but still, you do anything 5,000 times, it's going to add up. And they lifted the offer. And let's see what happened to the stock over that period. This guy actually had good timing, or gal, because they scooped it right kind of at the bottom of this trough. The 19th was kind of the last day that it hung out down there. By the next week, it was trading in the 9 handle. Then it got up to 10. By the 30th, it was trading almost $11. And then it got up to $12.75, it looks like. Let's see. Yeah, $12.75 intraday there on right before expiration. So the 13th. It shows me closing at 11.5 on this graph, but obviously it looks like intraday got up to 12.75. So this person had quite the opportunity to close these bad boys. The stock still looked good when it went out. The stock closed at 10.98 on expiration, and that's important where it went out on expiration because these calls were still open on expiration. So once again, we have this tale of people kind of swinging for the fences, getting a home run. This thing was 12.75 at one point. So these calls were at least 2.75, listeners. And they ended up going up. Still a good trade, still a good do, as used to say on the SIBO, going from 15 cents to 98 cents. But, you have your opportunity to get while the getting's good, and you have your opportunity to take it off without having to buy a whole bunch of stock. Hopefully, if they did buy all that stock, it hasn't worked out too well because the stock is trading a little bit north of $10 right now, 10.14. So they've pretty much given up almost all of that upside that they got there on the calls. So I don't know, Mr. Rock Lobster. If I see a pop in the stock, I'm probably dumping these things. But these folks decided not to, sir. And if they are holding the stock, it's not working out so well for them right now, sir.
Yeah, it's had a little bit of a range, right? Since the earnings. Even like 5 days before the earnings, $8 to 12.5, almost 13, and then back down to 9.5 and up. So, in a month, it's moving around a little bit. So, which kind of feels like the market. But it's like anything with options, they're not marriages, they're hot dates. So you gotta close them when you have the chance. So to speak, indeed, as we got one more here before we unleash Uncle Mike on his birthday here. Let's go out to NOC, a.k.a. Northrop Grumman. Of course, this is an aerospace and defense contractor, ticker symbol NOC, N-O-C. And let's go back to August 16th, so a few days earlier. Oh, the heady days of mid-August. Who can remember back so far? We were all young and optimistic and naive out there. And at the time, he profiled more upside call love to the tune of the these are the SEP 395s going up 3,220 times for 60 cents. Pretty much not that off the offer, but not lifting the offer. So kind of not quite mid-market either. This market was ridiculous. It was a dime at 80. So there was some room to wiggle on either side. They got these for 60 cents. That's about a 20 vol, so not quite as rich as the other ones we're talking about, but it's a defense contractor. It's not exactly the most volatile of names. The stock was right around 362 when this went up. And let's see how that saga worked out for them. Let's go back to the 16th here. This chart is kind of the opposite of the other one. The other guy had kind of scooped the bottom. This guy kind of almost lifted the top. They got up there again, got up to this, actually a little higher on September 2nd, 368. So it did sold off right away down to 361. And looked pretty aggressively in his face the next session or so. Then it rallied on the September 2nd at 368, looking a little better there. Then it sold off hard. By expiration, it closed at 349.66. So, yeah, these calls, unfortunately, listeners, no bueno on these bad boys here. So, yeah, they were still open, as you might expect, on expiration. On this little north of 3,000 lot, the guy dropped close to 200 grand out here. So that's kind of our theme for the week, or the segment here, at least today, listeners. People put on premium short side and long side, and they don't do anything with it. And unfortunately, at least for this guy, he didn't have much of an opportunity to do much with it. But it doesn't really work out for most of them here. Mr. Rock Lobster, once again, swinging for the fences, this time dropping close to that significant other's Ferrari, which I know is your favorite benchmark, maybe more like a decently used Ferrari, sir. But you know what? I wasn't seeing this one as I didn't see this one as like an opening sale, on this one, for the Northrop calls.
I thought it was a
They
buy.
lost to Ferrari.
I thought it was a buy. Yeah, a buy. Opening buy.
Right.
Yes.
Right. Opening buy, and then stock closed below. They were still open. It looks like yes, I'm sorry. I thought I misheard you. They did not gain a Ferrari. They lost one.
Are you still in the COVID fog on me, sir? Are you still in the haze?
It's been kind of a sleepless weekend, unfortunately. So not the best weekend for us.
So they dropped the significant others Ferrari, but we didn't drop Uncle Mike's segment. It's coming up next. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it is Monday. Time to unleash the uncleist of Mike's. It's a special day. It's his birthday. So if he wants to expound at length upon the life-changing impact of the Rockers on his life, it's his segment. He can do what he wants. Plus, it's his birthday. And then also, if he has some options, wit, and or wisdom, have at it, sir.
All right. So the Rockers, Shawn Michaels and Marty Jannetty, I believe that was kind of the start for Shawn Michaels. It's where he got his start. And he went on and did really well with his career. And like you said, Mark, not a lot of people had heard of Marty Jannetty. I do remember seeing him wrestle in the late 90s in WCW for a night or two, but it was not, I didn't think he looked very good on that. So anyway, with that, everyone who knows wrestling knows the success that Shawn Michaels eventually had with his career. So I'll just leave that at that. Now, in terms of the strategy block for today, I want to go over the difference between active and passive hedging. Now, I think there's a place for both in the world of hedging. In fact, I do both in the world of hedging. And so let me start off with an example of what passive hedging would be. You buy a stock or you buy a mutual fund, and what you do is you buy perhaps a 1-year put option on that mutual fund, or I'm sorry, on the SPX if it's a mutual fund, or let's say you bought SPY, you can buy a bunch of puts on SPY, and then you do absolutely nothing for a year. And after a year, you decide that, you know what, it's below where my strike price was. I'm going to exercise this option, or it's above it. And you think, okay, great. I had to pay the money for that protection. But with the money I paid for that protection, I'm okay with it because I ultimately profited on that trade, and I'm doing absolutely nothing during that time. That would be an example of passive hedging. Nothing wrong with it. And I'll talk a little bit about how we do it in our Hedge Strategic Night portfolio in a little bit. Now, an example of active hedging. An example of active hedging would be along the lines of, say, you buy XYZ stock and you put a collar on XYZ stock. Stock goes way down, and when the stock goes way down, you sell your put for a profit, and with the money you collect from the profits on the puts, you buy more shares of it. Now, you could do active hedging in a variety of ways. You could do it with just a married put. You could do it without the short call against it. You can do that in a lot of ways. But what I just mentioned would be an example more of active hedging. And I have examples of both of these in my portfolio, or in my clients' portfolios throughout, or mine, or all over the place. So I think there's a place for both of them. What I want to talk today is about how we do kind of a mix of both within our Hedge Strategic Night through RCM, my RIA, with whom the guys I work with, been working with them for over 10 years now. And this is how we do it with the Hedge Strategic Night. The Strategic Night in and of itself, and by the way, folks, I didn't think of the names of these, so forgive me if the names aren't as creative. I'd have had much more creative names if they'd have put me on the naming committee for these. But anyway, the Strategic Night in and of itself is kind of our flagship fund in that it's SMA, meaning that we put in separately managed accounts. But we've been doing this just with stocks only for many, 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 many years. For more information on it, we'll talk about that at the end of the show, where you can reach out to me. I can get you more information on it. But all it is it's a basket of roughly 30 stocks, and it's designed to beat the S&P 500. The market goes up 10%, we want to be up 11 to 13%. If the market's down 10%, we only want to be down 7 to 8%, something along those lines. Does it work that way every year? Good gosh, no. But that's kind of our goal of what we want to do year in, year out. Now, with that being said, we also have another version of that we call the hedged strategic night. And that's where I go to work. I know this is going to be shocking, but I'm the option guy of the team. And so on the hedged strategic night, what we'll do is we'll have roughly 90 to 95% of the money invested in those exact same stocks. But with the remaining money, we'll either keep some of it in cash or use all of it, just kind of depending on what we're looking to do with it. We will actually buy a put spread on either SPY or SPX, and we'll buy it roughly 1 year out. And so what we're looking to do is protect against a pullback in the market. And during the year, I will likely do absolutely nothing on this put spread. Now, with that, does that mean that we never touch it? We never do anything with it at all, ever? No, not necessarily. I've done stuff with it. But the initial plan going into the year is that we don't want to touch that put spread. We either want to watch it expire worthless because the market's going up, which is what we've done in recent years, or at the end of the year, we want to, usually the day before expiration, just cash it out for a profit and move on to the next year and realign and reassign everything for the next year. And that would be an example of passive hedging. Now, the way with which we do a little bit of both within the hedge strategic night. Let's go back to March of 2020. Remember that time in March of 2020? We had this new thing coming on called COVID. We used to joke about on the show called the beer virus because it was the coronavirus. And we thought, well, it should be gone a couple weeks. So what do we do with this? Well, of course, it wasn't gone in a couple weeks. And markets went down very significantly. So how did we hedge that? Well, what we did was we simply sold some stocks. We sold a good portion of stocks to where we limited our exposure to the S&P 500 and the market in general. And the market went down further. And so during that time, my hedge, the one that was designed for being a passive hedge, it did its job, and its job was to do nothing because the options didn't expire for another 8 or 9 months, and it did very minimal for us. Now, with that, if you're using a longer-term option like that, you have to have the understanding that if the market crashes right away, and especially if you're using a put spread, it's not going to help you that much in the near term. And it didn't help us that much. And so by doing what we did and just simply getting out of the stocks, that's how we were active in managing our risk, because we didn't know COVID was coming. All the purpose that we have this put spread on for is in case the market kind of putters around and then at the end of the year it's down 7-8%. Hey, we're looking good. But if we have a COVID event, we have a different plan. We got out of shares. Now, eventually it got to the point to where we got out of so many shares that I'm looking at the position deltas on our screen. I called up my stock partners. I'm like, hey, guys, you realize we're borderline bearish on the market right now with our positions. And they agreed. So we sold the put spread for a little bit of a profit because of the fact that it was a little profitable, but not a lot, just because the time frame was so long. And eventually we got back into it. We got in at the lows. We had a very successful year with that program in 2020. And so what that strategy does is it's a little bit of active hedging through stock management, but it's also passive hedging for the longer term in case the market pulls back slightly on the year. And that is how we do it. And that is my first ever strategy block as a 44-year-old.
There you go. Welcome to the mid-40s. It's a fun ride, sir, if I could say so myself, as we keep on rolling right on into the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Just want to let you know we have a fun question of the week popping off this week. I don't have the results from last. I'll have to pull it up and get the exact ones for you. We'll break down the winner of last week's hotly contested poll on our next one. Right now, the hot question of the week is, and this was inspired by a little discussion I had with Mr. P over there on Options Bootcamp last week. We talked about kind of misunderstood option strategies. I thought we put it out to you. There are many different misperceptions out there about options. However, some strategies seem to cause more problems than others. Quite simply, what is the most misunderstood option strategy. You can read misunderstood a number of different ways. I will leave it up to you how you construe that. But we gave you 3 choices. This was one I didn't really want to limit you. I wanted to let you guys kind of let your imaginations and creativity fly. So if you have a strategy that really bugs you or doesn't really work well for in your perception, you don't really understand it, or you think other people don't, feel free to have at it. This is one of the ones we did leave an other on. Usually I don't like to do that. This time we did. So we gave you 3 choices: straddles slash strangles, kind of the same thing, time spreads, and butterflies for number 3. And then number 4 is other. And you guys have all sorts of thoughts here. This just went live right before showtime here. Right now, let's see. Well, I'll give you a quick breakdown of who is winning first. Let's see. Right now, time spreads are taking it nearly 60%, about 58.8% of the vote for time spreads, followed by number 2, straddles slash strangles, 23.5%, 17.6% for strangles. No votes for others, even though we are getting others sent in already. We got someone writing in, Andre Topala, saying short puts. In his opinion, they're not getting the attention they deserve. He says, AKA, they're still considered bets by a lot of people. Said, but if you have to choose from our list, I'd say straddles and strangles for the same reason. Okay, so he voted for straddles and strangles, it seems like, even though he wrote in for short puts. And again, this just went live like 45 minutes ago. So get in there, make your voice heard. It's a fun one out there. Let's go back around the horn. Let's start with the rockingest of lobsters. Mr. Rock Lobster, sir, what are you keeping an eye on until we gather here together on Thursday?
Well, let's see here. We are 9 points away from the danger zone. Should
I cue up the Kenny Loggins? Is it that time?
It's you almost have to get that song cued, and then of course you'll be demonetized by YouTube and taken off the air. However, or what I could do for listeners is I could just hum it. So maybe the listeners don't want that. I'm going to guess they don't. So anyway, it is, we actually have, we're below 4,300 SPX. We're down 2.5%, selling off into the close. Cyber stocks, which were kind of a darling this year, are down pretty good chunk right now. So they're kind of selling some good stuff, or what was a momentum stock. And VIX is on the way to 24 to see if we can go higher. Maybe this is actual, the market's doing a little reflection of what they don't like going on in Washington. So again, whether you like the politicians or not, most of them I think are kind of worthless, to be honest. But as of right now, the market is voting with their feet. So I'm assuming they do not like what's going on in Washington. They don't like the inflation. They don't like the fact that oil prices, nat gas, I think is almost $6. So like there's some funk going on, and it seems to now be in the market. So again, I'm looking for VIX to go a little higher at this point, mostly because the sell-off, like there's really no reason for it, but it's steady. Like, stocks are selling off steadily, vols rising steadily. That's usually pretty bearish. So that's what I'm seeing, and hopefully I'll be able to sell some long vol here. I need a little bit more of a lift because I was a little bit greedy there, not selling all the puts that I had as usual. So I do need a little bit of a lift here to make some bucks. But I'm not going to complain about a 30 VIX if it happens this week.
No complaining from the Rock Lobster. Mr. Uncle Mike, sir, what are you keeping an eye on until our show on Thursday, sir?
I'm watching to see just how this shapes out. I'm actually looking where I'm going with this. So I think that today is kind of a key day, and that this is the second test of the levels with which we are at right now, and looking to see where we go with it.
All right, that music means we are out of time for this week's show. Happy B-Day to the Uncles and Mikes. Looks like a lot of our listeners in the chat are echoing that sentiment. Nichols, Unlimited, Options Queen, all a bunch more, all saying happy birthday to you, Mr. Uncle Mike. So, Mr. Uncle Mike, as a special birthday gift to our listeners, if they want to reach out to you, where should they go? What should they do, sir?
Well, follow me on Twitter. I could always use more Twitter followers. And feel free to reach out to me if you're looking for a financial advisor who works on his birthday. stcharleswealth.com. Follow me on Twitter at Mike Tosaw, TOSAW.
And send them some of those cool elbow drop windshield wiper things you talked about in the show last week. A great birthday present for Uncle Mike as we go around the horn. I don't know what would be a good birthday present for the Rock Lobster. Maybe some more cricket aside. But Mr. Rock Lobster, if folks want to reach out to the land of the pit, where should they go? What should they do?
Oh, yeah. Go to optionpit.com and go to memberships. Check out all of our goodies. We have from beginner to advanced as far as trying to teach you about options. Hey, and if you want, not only did we have crickets during the option block, but I also had them when I was teaching classes. So everybody got a little taste of cricket pie this year.
Join the Cricket Murder-a-thon over there in the land of the pit. Optionpit.com is the place to go. We got to go on out of here. If you're listening live, we got to do some rejiggering for our live guest coming up in about 55 minutes for the crypto rundown. Should be a good one, so stay tuned for that. We'll turn the live back on for that. If you're listening after the fact, it won't impact you. Just hit next on your device of choice. The crypto rundown will be there waiting for you. Tomorrow, got a great pro Q&A. Speaking of the crypto side, we got the creator of the Genesis Volatility platform out there, the folks who kind of know all the hidden secrets of the skew and open interest and volatility and everything else going on in the world of crypto. They're here to break it down specifically for you guys tomorrow. Start getting those questions in now. That should be a fun one. And, of course, Education Wednesday. Going to drag Brian on for a live huddle on Wednesday. That should be fun. Stay tuned for that. Very rare treat for that. And then Thursday, we're back again. Episode 2 of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.